I ended up making like 4 or 5 scalps on the CAD yesterday, as well as the pound. It was pretty nice. Excuse me. All right, so Aussie dollar, let's start on the 4-hour. General trend is down, as you know. Nothing's really changed on my chart in a while, right? And you remember this? There's our big support line, eh? And we came down and we tested it. Did we break it? No. Interesting, huh? So the question is, where are we going? Well, that's a pretty good question. So you can see here support and then a little support here. And look, we came down and we actually touched it, I think, twice. And this is the 4-hour, guys. And we're now up here. Cool. So you got 2 choices of what you can do. It's not a tough decision, as you can see. You trade it like a trend, and you kicked off the next level of support, which should be resistance if you're a trend trader. And this is the next one. Oh, I already did that a week and a half ago. Don't you love it? You don't have to be rude about it. Yeah, so anyway, so that's already part of the plan. The next thing is, if you're not going to trend trade it, right, your target is buying it off the bottom, right? You already traded the double bottom, and your target's the top of the range. So you either range trade it or you trend trade it. Huh? So let's zoom in a little bit with my bionic eye. Boop, 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 boop. Are you going to trade one of these? Well, like a bull, what the bull is expecting here in their trade plan is they need support, right? So great, we come down, we hit support, lower high, double bottom. What would a bull do, guys? You got the double bottom at support, which we identified a week ago. Great. So now what you're going to want to do as a bull is play it like this. And you're going to use this as like a left shoulder type scenario. It's not really, obviously, but okay, and that's what you're looking for. And like I had mentioned, your target's going to be up here, okay? If you're a bear and you think like the Aussie dollar versus US dollar is going to drop from 70 to 60, then you're a trend trader to the downside, okay? And you're expecting further commodity weakness. You know, at some point though, is oil going to go down to to free? How far can a commodity go before it's just free? Well, I'm preparing to study for oil, and I was doing some research on the original oil fields in Pennsylvania here in the United States. Back then it was called rock oil because most oil came from things like, you know, olives or whales. So it was a new idea that a rock could have oil too. It's kind of interesting, right? So anyways, there was a boom, and then oversupply created a bust. And one guy paid $2 million. Think of this. This is in like 1880, 1860. I forget. But anyways, he paid $2 million for it. And like 2 months later, he sold it for $4. $2 million in 80, and he sold it for $4. What a loser! So, anyways, can oil go down to free? Yeah, well, maybe. You know. So, anyways, I already have the bearish kind of plan here. The reverse of it, or not reverse, but a different way to enter it. Oh, hang on, let me kill the drawing tool here. Is sort of like this. Find your level of resistance. Okay, so you know it's up here, and then kind of look for the lower high, lower low scenario. And ideally, you have the fortitude to wait for this. Okay. Right? Because what you want is you want to be able to jam your stop at break even before you test this. Because what if it comes down at triple bottoms? Well, at least you didn't lose money, right? And you had the opportunity to win. Usman says, oil has an intrinsic value, it can never go to zero. Well, Usman, let's say right now we know the world is oversupplied. Oil prices are down. And you're a speculator, and you say, you know what? I'm going to rent an ocean liner, a freight. What do you call them? A big ship that holds oil. Not a freighter. Oil? No, not the rig. Tanker. Sorry, thank you. So you got yourself a jumbo super tanker, and it's just floating around in the ocean, and you filled it full of many millions of dollars worth of oil, but you only paid like $40 or even $35. You got a good deal. Now oil's down to 30, but you think it's going to go back up. What does it cost you to float that boat out there? It's called a carrying cost, right? And of course, then you got to also pay someone to fill the tanker, and then you got to, and then you got to dock somewhere and pay someone a fee, and then you got to unload it again, and then you got to transport it somewhere from storage to whoever's going to buy it. And well, there's costs. You see what I mean? So there's an intrinsic value, but there are carrying costs too. But there's also opportunity cost. You could have done something else with your money. So luckily, the real rate versus nominal rates with interest rates, inflation being so low, are not great. But you still have to use that in your financial calculations and stuff. So whatever. It's not. It could go to zero if, well, not likely, but theoretically. All right.